Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit in Equities. If you like our content, please don't forget to hit the like button. Also subscribe to our channel, click on the bell button and choose all notifications to receive important financial updates from our channel at the earliest. In this video, we talk about 10 medium-sized companies which Motilal Oswal believes are the ones to bet on going forward. Please watch this video to know more. Now the first stock on the list is Petrolnet LNG Limited, which is available at Rs 232.35. The price when this stock was initially recommended was 218 and the target price here has been set at 312. Now Petrolnet LNG Limited is engaged in sale of regasified liquefied natural gas. The company is engaged in the import and regasification of LNG. The company operates through the segments of natural gas business. Now if you were to look at the 1-year chart, you would see that this company has been on a continuous downtrend after initially being on the uptrend for about a couple of months. The market cap indicates that this company is a medium-sized one. The EPS of 14.85 translates into a price to earnings ratio of 15.65, which is largely in line with the industry PE of 16.23. The company also is available at a price to book ratio of 4.31, which is a bit on the high side. The debt to equity is 0.4170, whereas the return on equity for this stock stands at 0.1475. The company did not pay out any dividends and the promoter holding is just about average at 50%. Now the second stock on the list is Emami Limited, which is available at Rs 559.70. The price when this stock was initially recommended was 574 and the target price here has been set at 665. The symbol for it is EMAMI Ltd. Now Emami Limited is an FMCG company. If you were to look at the 1-year chart, you would see that this stock was on an uptrend for the first few months of the year, but since then has largely declined in value. The market cap of the company is 25,406.76, which again indicates that this company is a medium-sized one. The EPS of 7.57 translates into a price to earnings ratio of 73.94, which is largely in line with the industry PE of 73.50. The price to book ratio is also at an expensive figure of 12.56. The dividend yield is 1.25, whereas the promoter holding is a strong factor for this stock and stands at 72.74%. The third stock on the list is Tata Chemicals Limited, which is available at Rs 729.85 and the price when this stock was recommended was 708. The target price here has been set at 957. The symbol for it is TATACHEM. Now Tata Chemicals Limited is a holding company. The company is a manufacturer of soda ash and sodium bicarbonate for diverse industries such as glass, detergents, silicates, textiles, foods, pharmaceuticals, animal feed, mining and chemical processing. Now as is evident from the 1-year chart, the company was on an uptrend for the first few months of the year, but since then the stock has been consolidating. The market cap of the company is 18,593.39 crores, which indicates that this company is a mid-cap one. The EPS of 73.10 translates into a price to earnings ratio of 9.98, which is largely in line with the industry PE of 9.40. The book value of 444.51 also translates into a reasonable price to book ratio of 1.64. The company also has a strong dividend yield at 3.01%, whereas the promoter holding is a bit on the lower side at 30.63%. The fourth stock on the list is RBL Bank Limited, which is available at Rs 609.70 and the price when this was recommended was 573. The target price for this stock has been set at 650. The symbol is RBL BANK. Now RBL Bank Limited is a banking company. If you were to look at the 1-year chart, you would see that this company, after consolidating for the first few months of the year, has been on an uptrend. The market cap again indicates that this company is a medium-sized one. The EPS of 16.15 translates into a price to earnings ratio which is largely in line with the industry PE. The book value translates into a price to book ratio of 3.86, which is a bit on the higher side. The company has a debt to equity of 1.8402, whereas the return on equity for this stock stands at 0.1220. The company also has a dividend yield of 0.34%. The next company on the list is Mindtree Limited, which is a software services company. The price of this stock currently stands at 1013.30 and the price when this stock was initially recommended was 1030. The target price here has been set at 1225.00. The symbol for it is MINDTREE. Now, as is evident from the 1-year chart, this company has been on a beautiful uptrend for the entire year. It's only recently that this stock is consolidating. The company is a mid-cap one, and the EPS of 40.15 translates into a price to earnings ratio of 25.24, which again is largely in line with the industry PE of 24.08. The company's book value is 172.87, which translates into a price to book ratio of 5.86, which is a bit on the higher side. The debt to equity is 0.0352, whereas the return on equity for this stock is 0.2172. The promoter holding for this stock is also a bit low at 13.35%. Now the next stock on the list is Overa Realty Limited, which is available at rupees 468.85, and the price when this stock was recommended was 474. The target price here has been set at 616. Now Overa Realty Limited is engaged in the construction and real estate development and hospitality business. The company's segments include real estate and hospitality. The company is involved in the development of approximately 40 projects that aggregates over 9.18 million square feet of space. It handles residential, commercial, retail, social infrastructure and hospitality projects. Now, as is evident from the 1-year chart, the company was on an uptrend for the initial 3 quarters of the year, but since then has been on a slow decline. The market cap of the company indicates that this stock is a mid-cap one, and the EPS of 16.23 translates into a price to earnings ratio of 28.89, which is largely in line with the industry PE of 28.07. The book value of 123.37 translates into a price to book ratio of 3.80, which is a bit on the higher side. The dividend yield here is 0.43, whereas the promoter holding is a strong factor for this company at 67.70%. Now the next company on the list is Crompton Greaves Consumer, which is available at rupees 264.05, and the price when this stock was initially recommended was 262. The target price for this stock has been put at 305. The symbol for it is CROMPTON. Now Crompton Greaves Consumer Electricals Limited manufactures and markets a range of consumer products including lighting products and electrical consumer durables. Now the 1-year chart indicates that this stock could be forming something of the form of a rounding bottom formation. The market cap indicates that this stock is a mid-cap one, and the EPS of 5.55 translates into a price to earnings ratio of 47.58, which appears expensive when viewed standalone, but when compared with the industry PE of 55.69, this is still reasonable. The book value of 12.60 again translates into a very expensive price to book ratio of 20.96. The dividend yield is 0.66%, whereas the promoter holding is a bit on the lower side at 34.37%. Now the next company on the list is Team Lease Services Limited, which is available at rupees 2639.70, and the price when this stock was recommended was 2617. The target price here has been set at 3500. Now Team Lease Services Limited is an India-based company engaged in the employment services industry. If you were to look at the 1-year chart, you would see that this company was on an uptrend for the entire year, and even in this recent market correction, it has not really decimated in value. The market cap of the company is 4,513.03 crores, which means that the company is a mid-cap one. The EPS of 44.75 translates into a price to earnings ratio of 58.99, which is a bit more expensive when compared with the industry PE of 48.50. The book value of 253.07 translates into a price to book ratio of 10.43, which is also on the high side. The company did not pay out any dividends, and the promoter holding is below average at 40.83%. Now the penultimate company on the list is MCX Limited, which is available at rupees 833.70, and the price when this stock was recommended was 857. The target price here was set at 1000. Now the symbol for this stock is MCX, and this is a commodity exchange. Now if you were to look at the 1-year chart, you would see that this company has been on a consistent decline throughout the year. The company is a mid-cap with a market capitalization of 4,251.73 crores. The EPS of 16.91 translates into a very expensive price to earnings ratio of 49.30, which is much more expensive even when compared with the industry PE of 16.44. The book value of 305.28 translates into a price to book ratio of 2.73. The company has a dividend yield of 2.04%. Now the final stock on the list is Jindal Steel and Power Limited, which is available at rupees 202.35, and the price when this stock was initially recommended was 199. The target price here has been set at 327. Now Jindal Steel and Power Limited is an India-based steel producer. The 1-year chart indicates that this company was on an uptrend for the first couple of months into the year, but since then has been on a steady decline. The market cap indicates that this company is a mid-cap one, and the EPS of 1.53 translates into a very expensive price to earnings ratio of 132.25, which is also expensive when compared with the industry PE of 9.21. The company, however, is available at a price to book ratio of 0.86, which is very cheap. The dividend yield for this stock is not applicable as it does not currently pay out any dividends, and the promoter holding is a strong factor for this stock and stands at a figure of 58.66. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.